Ladies and gentlemen, it's Mike on Mondays. Hey, Mike, welcome.
Good morning, Liv. Hope you had a great weekend.
Oh, I did, and it's so nice to start the week with you, Mike. So what are your general things that you're looking out for this week?
Another hot week for earnings this week, Liv. You got 145 S&P names due out. You know, earnings and guidance. How do these companies feel going into year end? Also, too, let's not forget, we have the Fed speaking this week, and there's been a lot of talk of the Fed. You know, will the Fed keep its course with the 4 moves for the year and what their tone is going forward?
I mean, man, we just printed a 4.1 GDP on Friday. Where does that put rates?
So right now, I think it's a little too early to tell. To be honest with you, it seems like the market already had this baked in. You know, let's see in Q4 where that GDP number is and if this is sustainable or is it a one-off.
Good point. You know, Mike, we've had a lot of low volume. Is that an oxymoron? Anyway, how do we get any real clues as to what's really going on with that environment?
You know, I'm down here almost 19 years, Liv. Volume in the summertime seems to dry up, so it really is kind of normal right now. The problem is when there's not as much volume, sometimes you get a little bit more volatility in the market. This is where the designated market maker's job down here on the floor of the exchange becomes that much more important. And at GTS, with our premier technology and our capital, we're here to be on both sides of the market for our clients and listed companies. So it's kind of normal right now for the summertime, and it's expected to see a little bit less volume than usual.
Yeah, all right, so summer can dry up the volume too, but GTS adds that sizzle. Thanks for joining me on Monday, Mike.
Thanks, Liv. Have a great week.